Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to this Thursday, June 27th edition of the AICPA Town Hall. It's great to be back with the Town Hall community this week. I know we had an extra week's break in between Engage, the Engage conference out in Las Vegas, and today's event. It was great being out in Las Vegas. I think the favorite part about some of those field visits is just the opportunity to run into a lot of Town Hall attendees in person. So good to be back with you today. We have another full agenda, great lineup of speakers for you here today, and really excited to go ahead and jump in. So with that, I would like to introduce Rachel Dressen. Rachel, it's great to have you here in studio with me. Rachel is part of our governmental affairs team down in DC. And as we typically do, we're going to go ahead and kick today off with a DC update. I know there's a great picture of the floor of Congress here, and I think we want to start. I know Congress has a number of appropriations bills still before them, Rachel, so I'll go ahead and invite you to maybe weigh in on that a little bit.
Yeah, it's great to be with you. So the latest in Congress is they are working, as you said, through the appropriations process. So there are 12 individual appropriations bills, and they are trying to pass each one of those. And I just mentioned this to you because you may have seen on tax Twitter, on different media reports, that the House is cutting the IRS budget. And yes, in the bill that is being passed through the Appropriations Committee in Congress, there is a cut of about $2 billion to the IRS. But just know that this is just a starting point. This is not what is going to be in the final bill. So there's this cut to the IRS. There are also other policy provisions in there. They have to be related to the appropriations process, so it can't just be any legislation gets attached. But there are what they call policy riders. And what these policy riders do is they're typically no funds to do XYZ. And right now there are some policy riders that would have no funds for the SEC climate disclosure rule that came out back in March. And there are also some no funds for FinCEN to promulgate BOI reporting rules if they are deemed to be unconstitutional or beyond Congress's intent, as well as no funds for, IRS's direct file. So there are things like that in the bill. But again, this is not what we expect to be in the final package that is signed into law, which likely will not happen until the lame duck. So we'll have to go through a CR at some point, probably in September, before the October 1st deadline for the new fiscal year. And then they'll, once the elections happen, they'll have the lame duck session in which they'll pass whatever is signed into law. So
more to come. And I think someone mentioned tonight there might be a presidential debate that's happening. So maybe must see TV for some of us, but I would imagine some of that's going to begin to set up maybe where people fall out for next year as it relates to tax legislation that might be on the horizon.
Right. Yeah. So the first presidential debate is this evening. And, for political junkies like me, I will definitely be watching. And, probably millions of others. This will be the first time that we see President Biden and former President Trump on the stage together since the last election. So, like you said, we could get some indicators on tax reform, on where they stand on certain positions. It could be a topic that is brought up. They have said on, different appearances where they are on some certain issues. We could get more color. Like we've heard former President Trump mention, maybe using tariffs to roll back income tax, or, no taxing on tips. And we've also heard President Biden mention, raising the corporate tax rate or raising taxes for the wealthy. So we could get more information on, where they may land in 2025 for tax reform. But tax reform is not going to be easy.
Right.
We know it's going to be a big year next year for tax reform, but we just don't know exactly how it will play out, and the elections will determine that. But before the elections right now, what they're doing is they're having some meetings in Congress with members of Congress, just educating them on TCJA, because there is so much turnover in Congress that if every Republican who is running for re-election this year wins their election, only 84 of those Republicans actually voted on TCJA. So there's a lot of education that needs to go on.
Yeah, it seems like there's a lot of rhetoric, frankly, just in the system in general about next year being kind of like a tax Armageddon or the Super Bowl of tax legislation. But it does seem a lot of this just, it's kind of wait and see and maybe more hype right now than
Right.
we know.
Right. And it's, like I said, it's not going to be easy. It's not, and I wouldn't assume if it were a Republican sweep,
Right.
that TCJA would just get extended. Like I said, there are a lot of new members who didn't vote on that bill, and they may have different priorities. Also, we're in a different era where, they're going to be considering budget deficits. So CBO came out recently with their new projections for FY24, and the budget deficit will be around $2 trillion. So that's also going to be on top of minds for members of Congress as they look at tax reform.
Yeah, and I know the deficit is something we want to, it's obviously a increasingly hot topic and something we want to bring in the town hall for some discussion at a future town hall. And so, Rachel, I know we do have, I actually believe the AICPA team is meeting with FinCEN today, as a matter of fact. And I know you had some update on beneficial ownership information, but I also know that on the July 18th town hall, there's going to be a lot more to come on that, and we'll do a much more comprehensive review, but maybe tell us what you have for us today.
Yeah, so for the town hall, the Maryland Attorney General has come out with an opinion that says that UPL, the unauthorized practice of law, is fact specific, and in there are some guidelines. And so for us, what that means, because I know this is an issue for the town hall community that we've talked a lot about and that they all care about. So it means that for a CPA, they can inform clients of the need to report, and they can also provide that information and provide that reporting by answering, some of the questions on the forms for them. However, if it is something that requires legal knowledge or legal skills, that would therefore be a practice of law, and that is something that a CPA would not be allowed to do. So, like we've said before, use your judgment. You can answer some questions, but there is a limit to the questions that you can answer. And we have resources on our website for those who have additional questions.
Yeah, so it seems like this is the feedback to the town hall community has it's been pretty consistent. We've communicated up until this point. This doesn't really change anything. I think it's good common sense. And then more to come on July 18th. We'll have additional information to share. But to Rachel's point, we continue to update our resources at the AICPA BOI Resource Center, which is a live link. Well, great. Well, thank you, Rachel. We're going to bring you back in a little bit later on for open forum, but thank you for being here with us today in studio. And let's go ahead. We're going to go ahead and pivot now I'm bringing Lisa Simpson. Welcome, Lisa.
Hey, Michael. How are you? Good to see you.
Good to see you, Lisa. And I like that you and Rachel are coordinated. We're flying the green colors today. It looks great. We'll welcome in, and we're going to go ahead and pass over to you for an update on the technical portion.
Thank you. Before we get started on ERC, another one of our favorite topics, which is the employee retention credit, I do want to give a shout out to my new town hall friends in Montana. I went from Las Vegas when we were at Engage to Montana, and was lucky enough to get to speak to some of their members there. So that was fun and quite different than Vegas. So let's dive in and let's talk about employee retention credit. There was big news out last week that the IRS was announcing what they're calling their next phase of ERC claim processing. And what they've explained is that they've taken about 1 million claims totaling $86 billion. And since the moratorium on accepting or processing new claims was instituted in September, they've been analyzing those 1 million claims. And as they've looked through them, they've come to the assumption that, based on what they've reviewed, that at least 10 to 20% of those 1 million claims are high risk. They have clear signs of being in error, and they are high risk of fraud. So those claims will probably be seeing denial letters coming in the next few weeks. And those denial letters are going to come along with letters that say why they were denied and give instructions to appeal. The next category, which is the biggest category, are what they're calling medium risk claims. They think that they're a little too risky to just go ahead and straight pay out. So they are going to be analyzing these claims in more detail. They are looking for additional information. They might have some requests, and they will try to speed up claim resolution, but they also are going to proceed fairly slowly to avoid any risks of fraud in that group. So they've told us that those will be paid after a final review later this summer. So we'll see what later this summer looks like. I'm guessing that group is going to take quite some time, which leads us to the next group, which are our low risk claims. And they're saying that's 10 to 20% of the million claims that they've reviewed. I think they're at about 1.5 million in total claims sitting in the backlog right now. Those they're feeling comfortable about. They don't see any warnings around eligibility. They don't see signs of fraud. So they will start paying those out later this summer. So we'll see, again, what that looks like. And, we're just being told to continue to pack our patience. I know that this is really frustrating for some of your clients who feel like they filed legitimate claims. I've given you a couple of links down at the bottom there. One is to the IRS announcement. It's a Journal of Accountancy article that'll give you a lot of this information if you want to see it in a story like that. And also, we had Aaron Collins, a taxpayer advocate, at Engage in Las Vegas with us a couple of weeks ago. And we also had an update from a partner in a leading firm talking about what they're seeing with ERC. Aaron Collins mentioned that she's asking the IRS every week, what's going on with ERC? What's going on with ERC? And, the IRS just keeps saying they're trying to mitigate the risk of fraud. So to that point, on the next slide, we show the 3 programs that they've been using to try to slow down or prevent the fraud. The first one is the moratorium that we just talked about. If you remember, the IRS came out with an announcement that said after September 14, they would stop processing claims for a while. You can still submit claims, which is a key differentiator that I want to make sure we understand. You can submit a claim, but right now they are not saying when they're going to be processing any claims filed after that date. The next component of their fraud reduction program is what they're calling the withdrawal program. And taxpayers are eligible for that one if the claim has not yet been paid or they didn't cash the check yet. So you have to withdraw the entire claim, but the good news is that there's no penalties or interest. So that is still an option. If you're in one of those big buckets of the medium risk or high risk, and you're thinking, well, maybe I need to go challenge my eligibility again, you can consider withdrawing your claim. The last program that they offered was what's called the Voluntary Disclosure Program. That ended in March. It is currently on hiatus, but the IRS is giving signals that maybe, depending on how their claims review goes, that they will reinstate a program, something like that. So that was available if the taxpayer had gotten their refund and cashed it, as long as they were not under investigation for a tax exam or a criminal investigation, and they hadn't been notified that the IRS was challenging the ERC claim. The original huge benefit of that voluntary disclosure program was that the taxpayer only had to pay back 80% of the credit that they had received. The IRS had said that any future programs will not be that attractive or as generous. So again, I know that's frustrating news, but we are continuing to ask. There's pressure coming in from Congress, from Taxpayer Advocate. But again, IRS is really trying to focus on preventing fraud in that program. So that's our ERC update. Another big news item this week was a U.S. Supreme Court ruling around what was called the Moore versus U.S. case. And this was a case that generated a lot of interest because it had the potential to upset some tax methods that Congress uses. But the Supreme Court issued a fairly narrow ruling upholding what's called a Section 965 transition tax. This was a one-time repatriation tax on untaxed foreign earnings that was part of the 2017 Tax Cuts and Jobs Act, what we affectionately refer to as TCJA. So a couple of taxpayers had filed suit because their claim was that being taxed on income not yet realized was unconstitutional. The Supreme Court took, again, a narrow ruling and said that in their consideration, this aligned with pass-through entity taxation, where an entity's undistributed income is attributed to and taxed to a shareholder. So there is no ruling from the Supreme Court as to whether or not there is a constitutional requirement about whether income has to be realized before it can be taxed. That has implications in future tax debates around tax on unrealized income, or what's called a wealth tax. So we'll keep an eye on that. But it's an interesting case. I'd encourage you to read the Tax Advisor article that goes through it and explains some of the considerations. And we're excited to announce that we have a podcast coming out on the Tax Section Odyssey podcast series with Tony Nitty, who will be going through that with us. That podcast should be out. If it's not today, it should be out tomorrow. So it's on the cusp of being released. And I'm sure that'll be an interesting look. So those were a couple of big tax items this week, but we also wanted to make sure that we call out announcement about another set of disaster relief targeted at New Mexico. Parts of New Mexico were ravaged by fires in June, and they've been declared a disaster area. There is a link that I've given you. Again, if you download the slides, you should have all of these as live links that will take you to where the IRS posts those various announcements. Unfortunately, I'm expecting that we'll see more with the flooding that's going on in the north area right now. But if you want to stay up to date on those announcements, the IRS website will give you that. And I also wanted to remind you that we do have a disaster relief resource center that you can access as well. A lot of you may not know about the AICPA Benevolent Fund, so I wanted to make sure that we called that out as well. This is available for AICPA members who are facing hardships, and it could be unemployment, it could be health, it could be accident, it could be one of these disasters or a primary source of loss of a primary source of income. So just a reminder that we do have resources if you find yourself in or one of your other colleagues in these situations. And then I have just kind of a hodgepodge of IRS updates for you that I wanted to just get on your radar. We're not going to go into detail on these because they're fairly niched and nuanced, but you've got resources to dig into if one of these topics appeals to you. So we have a draft Form 6765, which applies to the research credit that the IRS has released. And we just wanted to call out that our comments and feedback from other stakeholders kind of nudged the IRS to make some changes for the research credit that were aimed at lightening that taxpayer burden. Got a great article for you on Tax Advisor. FAQs were released on educational assistance programs, and then some interesting guidance around retirement plan distributions. And I hope none of us need this, but it is related to exceptions around the 10% additional tax for emergency, personal or family expenses, or for survivors of domestic abuse. So again, a quick hodgepodge, but just wanted to get those on your radar. Melanie Lauritsen will be here on our next town hall, and she'll have another set of updates for you as well. Hey, Michael, welcome back.
Hey, thank you, Lisa. Great update as always. Lots to cover there. And I think we're going to go ahead and make a small pivot here. Lisa's going to stay with me, and we want to talk a little bit about small firm growth strategies. And we'd like to bring in our next guest. Welcome in Brian Davis. Welcome, Brian.
Hi, how you guys doing? Thanks for having me.
Hey,
Great
Brian.
to have you, Brian. Well, Brian got a kind of a unique story, so we're really excited to have him join us today. And he's going to talk a little bit about going out on your own and the transition that he made in starting his own firm, but then really dig into some of his strategies for growing and scaling the practice. So, Brian, great to have you with us today. Maybe tell us a little bit about how it is that you started your own firm, a little bit of that kind of background and history.
Sure. Yeah. So, I started in accounting, fresh out of college, and I went right into public firms. I worked in public accounting doing, learning the ins and outs, learning the ropes, doing a lot of tax prep, also working directly with some of these partners who have been, 30 plus years of experience in the industry. So learned a lot, but also started to realize that, I was very interested in the technology changes that were happening in the accounting industry. Around that time is when QuickBooks Online became a thing. And I was kind of nominated in the firms to be the one to, help the firm move forward into the future with that. So worked in public accounting. After about 5 years or so, I was able to, get my first real estate property. That was always my dream to, my passion to get into real estate, even though I was an accountant. And that's kind of what helped me transition into starting my own firm. In that process of buying my first rental property, I was able to meet with different real estate agents, lenders, inspectors, title agencies, real estate attorneys, and all of them seemed to be interested in, hiring me as their accountant. So it kind of gave me that, that boost of confidence I needed to say, hey, I can, I could do this. There's a market for it. And one thing I learned was a lot of those real estate investors and industry people that are in that industry, they're not necessarily thinking about just getting their taxes done for last year and checking the box. They're more thinking about things like, oh, how do I, manage my numbers? How do I prepare for tax law changes? How do I get ready for the future? So that's why, when I went out on my own, I kind of leveraged my real estate experience. Started my group of what I call the A team. That's the people that I used in, getting my own real estate properties, and, just grew from there. And, my firm, it's a one-stop CPA. We do tax planning, we do tax preparation and, compliance related things, but it's just, grown from there ever since. I've been on my own for about 7 years now. And, I started off in 2017. And of course, with the pandemic, 2020, everything kind of went all virtual. Clients were more embracing of my firm because I was, doing everything remotely already. So that's kind of a little bit of backstory on me and how I got started in public on my own.
Brian, I love how you combined your passion, your real interest in real estate to figure out where you wanted to go with your firm. I think that's super cool and a real benefit of having that CPA and getting some experience to figure out what you're really interested in. I love that.
Yeah, thanks. Yeah, I mean, definitely, working in the industry, I was able to see so much wide variety of different, clients that I would work on. But I realized that the ones I actually enjoyed speaking with and the ones that I, got excited about were, talking about, forecasting. How many properties do you want to have? How do you want to pass these properties down to your kids and those kind of conversations. And that's what I was really interested in. And, lucky for me, it worked out. There's always a need. I think when the economy's going up and the real estate market, it experiences ups and downs. I think there's always a need for us as accountants to be more than just a somebody that's doing your tax return for you. It's somebody that's going to give you advice when you're trying to find those areas to save money and grow. So it's been great.
Hey, Brian, you mentioned you were virtual going into COVID, right? So the firm was already virtual. Was that a big advantage for you as far as not having to really pivot or change? It seemed like you already had that culture in place.
Yeah, I think so. I think it definitely served me well because I did, still speak with a lot of my friends who I used to work with, and I kind of saw those, a lot of problems they were running into with, having to, whether they go to the office, having trouble with getting clients to send them documents and things like that. So when I started on my own, in 2017, leading up to the pandemic, it wasn't as easy. It was a little bit harder to get clients to go virtual. I would meet with clients in person, but like let's say I'm getting them to sign their tax return, I would have them, pull out their phone or go on a computer to sign it. I would say, hey, I don't do anything. I don't print out paper and do it that way. So it was a little bit of a struggle. And then once 2020 came and everybody was like, hey, this is something that we could get done online. Let's do it online. And, I think that definitely was a turning point.
And maybe one last question before you pivot to how you're growing and scaling the firm today. Any like one piece of feedback over all others that you would give to anyone who is thinking about going ahead and starting their own firm? Anything that, just remains with you about that decision that either you wish you did differently or you were really glad you did?
Well, one piece of advice I'd say is, you can't predict what's going to happen, with your firm. You're not going to write down, hey, I'm going to have 100 clients. They're going to pay me this amount, and this is what I'm going to do. It kind of changes as you see, just like you guys mentioned, there's always things that are changing. PPP became a thing that all my clients relied on my advice for and my support. ERC, BOI. These are things that, are kind of thrown at us, and, you use it as an opportunity. So instead of just thinking that, hey, I'm going to have this amount or I want to hit these numbers, just really try to think of, hey, how can I build a business that's built to last? And keep your ears open, try to help your clients as much as you can. And it ends up working out for you.
Great. So let's go ahead and talk a little bit more about, kind of what you see as the key tenets for scaling your firm.
Yeah, definitely. So yeah, as you see there, efficiency is very important. So, at a certain point of being on my own, I was relying only on just referrals and, meeting clients organically. And then once my firm started to grow in size and I started to get, a team, I realized that, having your processes documented, knowing the workflow when you're on your own and you're doing everything from start to finish, you're the secretary, you're the one that's doing the tax prep, you're doing the review, all that kind of stuff. So when you try to scale and grow your team, you want to make sure that you slow down, document everything you're doing. And then nowadays with all the technology, with AI, with things, there's always something new that if you just kind of keep your mind open to the fact that you may want to switch things up in your firm and always look for a way to involve your client in the process. Try to give them some kind of benefit, like, hey, I'm switching over to a new CRM and this is how it benefits you. Of course, it benefits me by having, the ability to automate things and, have everything in one place. But if you try to tell a client, it's like a task that they're like, hey, why do you have me doing this? Try to give them something. Hey, if you go in there, I'm going to give you a free template or something like that. Like, try to find a way where you can give more value to your client, because, nowadays, I'm sure everyone here supports this is, we have to be more advisors and have a cash practice than just a compliance practice. So how do you do that? You got to get ahead of things with clients. You got to be giving them, showing them that you're ahead of the curve with AI, with, delivering them their tax returns seamlessly, giving them those services so that they can open up to other conversations with you, and you could give more advisory type of services.
So, Brian, I know a lot of firms, when they're trying to move into, this efficiency approach, they might struggle to get their clients to buy into the portal. And
Yep.
so I'm curious as to whether or not you have any tips on how to get clients to use a portal.
Well, definitely, investing in the right portal. The portal that I use, it's called TaxDome, and I really love it. My team enjoys using it, and the clients actually really love it as well. So, look at it from a client perspective. When you're signing up for something, just like I said, if your accountant's switching portals every year, then you kind of get frustrated with them. You say, well, it doesn't seem like you have everything together. You might end up losing clients if you're switching. So really invest in, doing that research, trying out different ones. But the one that I use, I love it. There's a mobile app for it. I'm able to link my .cpa domain to it. So that's great. So it just gives that security to the client. So they feel like, hey, this is a better place to store my documents with my personal information, because, we're holding on to very secure information that we should be very careful with. So definitely do your research on it and make sure that it checks the box for how you run your firm. I try to push it to them anytime as possible. If it's a new client, I try to get them into our client portal, like on the first, conversation, even before they pay me. I'll try to get them to let them know that this is where we're going to do business, because in this all virtual world, we're delivering such high value services to people. You want to look professional, but you also want to make sure that they're going to buy into it with you. So you're also kind of interviewing your client to make sure that they're going to work with your tools. Because like I said, if you're working in an all digital firm, and your client doesn't want to use your app, it's going to make it hard to get the information you need from them.
That's a great point, Brian. It's a great point. And one more question on efficiency, because you've got specialize on up here on the slide.
Yeah.
How important do you think that niching in the real estate vertical has been to helping you drive that efficiency and standardization? Do you feel like that's a good approach for smaller firms?
Yeah, definitely. Because, as many of us, when we start out on our own, we kind of just take everyone on as a client. We give everyone our cell phone number. And I made that mistake when I started, but, really niching down into not only because I have a passion for it and because I'm involved in it personally, but because that's where I can deliver, exceptional results. I could give, use my cool AI tools that I built just for my real estate business, those type of things. So niching down definitely makes it easier for you to offer advisory services. When you're doing compliance work, bookkeeping, accounting, tax preparation, sure, we can do that for a wide range of industries. But when you're doing it specifically for someone, that becomes less of the conversation and more of the advisory stuff they're looking to you for. Hey, give me some advice. I'm looking to grow. I'm looking to, wind down my portfolio, any of these situations, because, they come to you as an accountant for these type of things.
I think it's a great point, Brian. I mean, when you become a specialist in a particular niche, you can just go so much deeper with the client from an experience level. That in of itself is there's a lot of value that accrues to the client, particularly when you're talking about business insights and advisory. So it makes total sense, and I think is probably the single number one reason why specialization, a lot of firms are looking at that. Hey, Brian, how adamant are you about, say you come across a firm and they're resistant to some of the technology you use, like the portal or maybe other workflows or processes you have, will you pass on a client, or do you have flexibility?
It depends. We still have some flexibility. I even have a soft spot in my heart for some of my original clients that
Right.
started with me when I was just now on my own. I may meet with them at an office just to have our annual recap, but for the most part, yeah, any new client that I'm meeting nowadays, having a good online presence when you're trying to grow is the approach that I'm taking with my firm, is to try to grow it online, grow it virtually. So For the most part, that's where I'm meeting my new clients, is they're coming to me online, and I at least have their email address by the time I talk to them. And that's something that's new for me as well. I come from when you work in a firm and sometimes you meet people in person. Sometimes they give you so much information about themselves, their tax situation, their personal finances, and you still don't even have their email address. So nowadays, when I meet with a new client, or if I have a discovery call with them, I already at least have their email address. So I know usually if they could put in their email address and access an email, then, I'll be somewhat flexible with them, if, because with the portal, the client side it's more convenience for them. So if they can at least log in and e-sign their returns, then, usually we could somehow still make it work.
Hey, Brian, maybe in the last minute that we have here, I know you mentioned you branded the firm with a .cpa domain. I think, it was kind of brilliant using onestop.cpa. It helped you stand out. I think you mentioned to us, in some of our prep conversations. But maybe just touch a little bit on how you're leveraging YouTube. I know I saw some great stuff off your site just on tutorials and how you're engaging with clients, but that just seems like a great way to attract and create a connection with clients.
Yeah, so I use the .cpa domain because it's something that originally I got that because of a phishing scam that happened to one of my clients, not directly with me, but because they got an email that looked like it was from a vendor that they usually do business with. And, I said, hey, I got to get ahead of this, because in the future, it could happen. Somebody tries to imitate your website, because anybody could get a .com website, and then they send you an email with your logo. I mean, you could go on my website and get my logo, so you see there. Right. So if somebody creates an email and says, hey, this is, One Stop CPA, you need to pay your taxes with this link, then that's gonna, that's kind of scary, because some clients will, they have such a trust for us as their accountant that they see something like that, they want to move on it right away. So what I do when I meet new clients is I send them an email that says, hey, if you ever get anything from me and you don't know if it's me or you have questions about it, just make sure it's got that .cpa in the email, because then it's from me. And that's just kind of getting ahead of what I think is, something that fraud and phishing scams are getting bigger and bigger now that we're in this more digital era of the world.
Well, great. Well, thank you, Brian. Great having you with us here today. We'll have you back for open forum, but some really great insights. Appreciate it.
Thank you.
And Brian, you're getting a lot of love in the comments. So they're loving the practical advice you're giving and your focus on client relationships and technology. So thank you for sharing all that with us.
Great. So Lisa, over to you. You're going to talk to us about the talent pipeline.
Yes. And I am happy to bring up Lindsay Stevenson. Lindsay is the Chief Transformation Officer at BPM. They are primarily a West Coast focused firm, but Lindsay, our hearts are with you and your other South Dakotans or North Dakotans. I can't remember, South Dakotans today. But Lindsay has been an amazing volunteer with the association for years. And her most recent volunteer stint, one of her most recent, I should say, was serving on the National Pipeline Advisory Group. And we've talked a few times about the NPAG, another one of our lovely acronyms in the past. But Lindsay's here to walk through some details around the draft report. And as you can see, we want to make sure that you have access to the report. I encouraged you all to read it and do your homework before Lindsay came today. So hopefully you've had a time to do that. But if not, please go to accountingpipeline.org to grab that draft report. We're going to ask for your input. We're closing in on the deadline to get your feedback on these proposed solutions. So grab those QR codes or accountingpipeline.org to get to either of those two options. And Lindsay, thank you so much for joining us today. I'm really excited to get the chance to talk to you about NPAG and some of the proposed solutions that they've come up with to hopefully address the talent pipeline challenges that the profession is facing.
Well, it's always a pleasure to spend time with you on Town Hall, Lisa, and I'm honored to represent my other NPAGers. I'm not even sure that's a word, but now we've made it one. But 22 incredible people in the profession from all spaces in academia, government, business and industry, public accounting, small firm, big firm, medium firm, all across the board. And they all got together and spent 10 months really diving into data first and foremost, and really trying to uncover what was happening in the accounting profession pipeline, where it was happening, why it was happening. Really tried to circle back and have a ton of feedback loops with stakeholders. So really, those that contribute to our profession, AAA, NASBA, right? So many, I can't even mention them all, but really trying to connect with them and understand what's possible and why are things happening. And then taking all of that and putting together this draft report, this QR code. If you did do your homework, props to you. It's 80 plus pages of amazing reading. It's a lot to digest. If you haven't done it, there is an executive summary that's, I think, about 6 or 7 pages that may give you a little bit higher level insight to what we were trying to create and accomplish. But that draft report is live, with the hope that we issue the final report after we've had a chance to digest all the feedback from the second QR code.
And what I love about the work that Impact did is that it's all data driven. And on the next slide, we have some of the data points that you used as you were coming to some of your discussions around proposed solutions. So you've got data, and then another critical component of the work that Impact was doing was that nothing was off the table.
Yeah, we had a wonderful consulting group that was helping us through the process, Convergence Coaching, and Jen Wilson, many of you know her, and Tamara and their whole team, amazing. But really, the very first day we met, the first conversation we had was put the elephants in the room. So let's just get them out there. Let's talk about the really tough things. And so we focused on data. And here were some of the data points that really, they sort of were the starting point for the conversations we wanted to have around what could solutions be if we really understand what's actually happening in the pipeline. So, this one is astounding that only 1 in 8 business majors is graduating with a bachelor's degree in accounting. That's crazy, right? Business accounting is the language of business. So only 1 in 8 students choosing to be an accounting major. That's kind of insanity to me. And then the student perceptions. So the reasons that they don't pursue accounting, lack of interest was the number one reason. So we are not making it exciting. They don't know the story. They don't know the impact. They don't know that accountants are driving economies and leading small business and changing communities, right? They don't hear those stories. And so they think it might be boring. And so there's this lack of interest. And that's really the underlying, when we dug into the data, some of those reasons of lack of interest were it doesn't seem exciting. It doesn't seem like it's going to be very fun. It seems boring. Those kinds of language were used. And so we thought, man, we could do some of these things. So really, once we went through all those data points, we looked to find what those themes were that the data told a story. And when we got down to it, there were really 6 major themes that the data told us were true about the accounting pipeline. So, these first 2 are the 2 that we're going to spend some time on today. There's a lot, and you'll know when you go look at the report, there's no way we could fit it in on a town hall. Even if we did a special version of 2 hours, we would still need time to talk. But enhancing the employee experience and addressing the time and cost of education are the 2 themes that we'll cover today. But when you go and look at the report, the other 4 themes around making education more engaging, growing support for CPA exam candidates, expanding access for underrepresented groups, and then telling the more compelling stories. So that goes back to the lack of interest and why students aren't interested in the accounting profession. So
because we can't spend 2 hours today talking about this report, for those of you who are accessing the materials, you can download a separate section in the materials that is, it's a PowerPoint that we've converted into a PDF for you that goes into more detail about the 4 topics that we can't go into today. Also gives you more data points and more insights. So make sure you access that as well. But again, Lindsay, today we're going to talk about those first 2.
Yep. We'll stay high level. So I think we're going to talk about the time and cost of education because it is one of the elephants in the room. When we started NPEG, the 150 hours was a huge conversation and nothing was not okay. So we could talk about anything, and you could be really passionate about keeping 150 hours. You could be really passionate about moving to 120. You could be really passionate about throwing everything out with the bathwater and starting from scratch all over again. And the team explored every option we could possibly solution. And there were some like wet spaghetti noodles that did not stick to the wall, but they were pretty crazy. And so after we went through the data, after we really tried to understand what is it about the cost and time of education, what are students telling us the reasons they aren't wanting to stay in for 150 hours? Is the 150 hours in and of itself a barrier? And also protecting CPA mobility. So it became very, very challenging to try and figure out how do we navigate such a challenging topic when we have regs and rules and legislation that are required to move us forward. And so what the team came up with was this three-pronged approach. And our intent was to look at near or now, near, and next, right? So we want to have this sort of like, what can we do today? What can we do in the near future, tomorrow, next week? And what can we do 3 to 5 years from now? And so what you see on this slide, well, it can be kind of confusing. Hopefully I can add some clarity to it. But the top 3 rows, those are the things, the top 2 rows are the things that we have today. So today, from a mobility perspective, you have mobility in almost every state, almost all the time, with a bachelor's degree and a master's degree, plus 1 year, plus the exam, or a bachelor's degree and 30 credits that are specifically identified around the type of credits that you take, 1 year, and the CPA exam. So that is how most people today become CPAs. So what we have proposed is that the near term, what we could do very simply and easily, which is what ELE is already designed to do. So that's what the AICPA has already produced as an opportunity and a solution, is a bachelor's degree plus experiential learning that is on your college transcript. So from a legal and regulatory perspective, there's no change to complying with 150 hours under that model. Still 1 year of experience, still the CPA exam. Now, the tomorrow solution, the next phase, would be moving those 30 hours off of the transcript. So still needing specific hours related to experience. They would be structured. The intent would that those would be diagnosed. We would have those a monitoring program in place, all the things around having that be structured. And then 1 year of experience in the CPA exam. So that potentially puts mobility at risk, which is why you see it in the red outlined box. There's a mobility impact to doing that, which is why it's not a now. It's a little bit later as we navigate how that looks at a state by state level. The last approach is the big, hairy idea. And this is moving to a competency-based model as it relates to degrees and extra credits and experiential learning. And the reason for this big, hairy idea solution is because external factors are shifting and we want to future-proof the licensing of the profession for the future. And so one of the things that we looked at is there's 13 universities in the US today that are testing or have already gone to a 3-year bachelor's program. So having 150 hours or 120 hours in the legislative language puts us at a disadvantage in the long term. So we really wanted to look at ways that we could change the language, we can change the legislation and the rulings and the regulations to really be dynamic with what matters to us in the profession as we continue to evolve and develop. So it's a bold strategy. We know it's going to take a huge, heavy lift. There's a lot of how involved. I'm not going to go into the how right now because there's a whole team that's going to be behind that. But this was kind of the big, hairy idea that I wanted to make sure that all of you heard today, because it is a shift from focusing on 150 or 120 hours and really going to this competency-based success model.
Lindsay, you had to cover a lot quickly, so let's scoot on over to the next topic. And again, we want your feedback. So on that QR code or on that URL, you've got the opportunity to give us your feedback on these proposed solutions. The next big, hairy topic that we want to talk about is enhancing the employee experience. I just saw a question pop up that says, come on, let's be real. It's not about the 150. It's about the employee experience. It's about the lifetime of overtime. Let's address it. Let's talk about that. And we've got about 3 minutes.
Yeah, so I'm going to cover this slide quickly because I actually want to get to the next slides that inform why these are the solutions that are being proposed. But nothing on this slide is going to be new to any of you. I think unless you've had your head under a rock in the accounting profession, these are all things that have been topics of articles and podcasts and probably in your organizations, probably at the dinner table. Nothing here should be new, but it's really the intent of the NPEG report is to dig into these to how could we do this together, all moving in the same direction. So addressing starting salaries, not new. Not going to be even something crazy that you talk about, but the how of that, how does that look? How does that look for your organization? How do you contribute to it? That might be new. And again, pay transparency fits right in with that. Overload and burnout, our workflow management, our client management. We've been talking about these things for years, but we haven't taken action. And the hope is that with the report, there is some structured recommendations around action to be taken that we can all be rowing in the same direction. And then, of course, culture and diversity is always highest, right? That's always highest in our thought process. We want to reflect the communities we serve. So,
and I know you've got some data points on the next slide.
Yeah.
So we'll hit this one quickly and then dig into the next one, hopefully.
Yeah. So this one, this is like a no-brainer, but basically the surveys that we sent out when we were researching NPEG, it's pretty much even. Students and everyone in the profession agree, 84 and 85% starting salaries need to go up, and that would have a meaningful impact on our ability to attract talent. It's as simple as that. And then the other side of the slide, we are not increasing our beginning salaries as much as other career opportunities for the same student types. So mathematics and statistics, they've increased by over 26%. We haven't, we're at 16%. So we got to catch up. Right. So that's like the blow you away of this data on the slide. And then the next slide really talks about what students told us, what else is important. So it's not just salaries. So you can see in the green, that's what students told us on the survey. In the blue, that's what you all told us in the surveys. So for them, it's being supported through the CPA exam, getting bonuses, getting paid out for doing that, having time off to study for the CPA exam if they're taking it when they've already been hired into an organization, flexibility in their work arrangements, and manageable workloads. I mean, none of this is rocket science, but the market is telling us what we need to do. So we just have to take action and do it.
So Lindsay, what's next? How are we going to start moving on all of this?
Well, we're almost there. So we're working on the final report. Your feedback through July 1st will inform that final report. We hope to have that issued by the end of July. In August, we'll be socializing more and more of those recommendations with the stakeholders, people like AAA, NASBA that are responsible for moving the needle in some of those areas. In September, we are excited to start exploring through a summit who, how, and what. And we all know that as accountants, that's where we want to go. So it's coming, and that's where we hope to be in September. And then October, we'll be doing another report out to let everyone know where we're at and where we're headed.
And I think it's important to note that this is not just an AICPA initiative. This is multiple stakeholder groups, state boards, state societies, firm representatives, AAA, like Lindsay mentioned, and it goes on and on. As a profession, we all have to align around the who, the how, the when, and the what. So just wanted to make sure that was clear. And Lindsay, you've got an ask of everyone in addition to giving us some feedback. What's the ask?
I have one last ask, and thanks for giving me a little extra time so I could make sure I could fit it all in. If you have your phone, grab it, scan this QR code. This is what we're calling the Pipeline Pledge. It's for each of you individually, so not as an organization, not as a volunteer, not as anything other than you personally as a member of our profession. What action that you are willing to take in the next 12 months to contribute to building the accounting pipeline. And it could be anything from choosing to mentor a student to going out to campus and having a conversation about how cool your job is as a CPA. But whatever works for you, what action is that? And then just signing the pledge to say you're going to do it. It'd be amazing.
That was some speed talking, Lindsay.
Get through it.
But
I was going to say,
lots of comments.
You guys definitely get the award for covering the most material in the shortest amount of time. So
we endeavored to meet our timelines, Michael.
like a good train, we're running on time. Thank you, Lisa. Thank you, Lindsay. That was great. We're going to go ahead and move into open forum. We do have a few minutes for questions. We'll bring up our group. Well, super. So maybe I'll kick it off. We'll do a little round robin here, and we'll try to move fairly quickly. But Brian, let's start with you. Just to kind of echo what Lisa said earlier, people really enjoyed your segment, and kind of your story, and just a lot of the advice you shared. One quick question that popped up was maybe just how do you manage IT challenges within a fairly small firm?
That's a great question. Definitely doing your research, testing things out. I do consult with IT companies sometimes just for like contract work, but overall it's a it's a long process of trial and error, trying out new systems, testing them out. But I don't know. That's a tough one.
But do you leverage like an outsourced IT company for support, or?
Yes. And they help with as far as setting every team member up so that they could do we could all work on the same, basically like the same desktop. Especially when you're doing onshore and offshore teams. There's timing differences. You want to make sure that you have that set up. But that's what we usually do.
Great. And Lisa, maybe one for you and/or Lindsay. I know there was one of our attendees mentioned they're speaking to a group of high school students next week about accounting, and what resources would we have that we might recommend?
Can I take that one, Lindsay?
You sure can.
Because I learned this lesson. I was speaking to some college students a month or two ago, and spent hours and hours and hours and hours and hours putting together my slides that included pictures of me from the 80s. So y'all would have loved it. But then I went to thiswaytocpa.org and found everything I needed. So go to This Way to CPA and you'll find pre-made PowerPoint templates that you can use. And there's some games in there that you can play. No pictures of me from the 80s, but I think you'll still have some fun.
And great, thank you, Lisa. And Lindsay, maybe a quick follow-up to you on that last segment, but how did we, and how did we, if we did, factor in maybe the impact of AI on pipeline? Did that come up?
Oh, absolutely. I think part of what MPEG was doing was trying to navigate how much do we leverage technology versus focusing on the people side of the pipeline. But AI is going to have an impact on how people learn, how people engage, how people connect. And if we think through that, that learning piece of going to competency-based in the licensing procedure, that was a lot of talk around AI and tech, right? Because our people will be learning in new and different ways that we can't even imagine yet today. So accelerating the pathway into the CPA world is a must for us to stay relevant in the marketplace. So definitely consider it.
I'm going to turn to Rachel. Rachel, people still try. So there's a question about, is there any chance that BOI gets extended or pushed out?
I would have to say, unfortunately, it's probably pretty unlikely that happens. I will say that the AICPA did send a letter to Treasury earlier this year asking that they delay any enforcement for a year, given that there is still confusion.
Okay, great. And Lisa, maybe a final question for you, if I may.
Someone wants to know where they can get pictures of me with curly bangs. Maybe I'll do that as a fundraiser for the Benevolent Fund or the AICPA Foundation. I don't know. We'll chat about that after.
I was not going to go there, Lisa. I was not going to. But on the on ERC, do you have any sense of how how the IRS is classifying high, medium, or low risk claims?
There were initially the first batch of denials was really pretty It was employers that didn't even exist during the dates of eligibility. So they're looking at all kinds of factors, including, does the employer have payroll? Were their employees actually being paid? So they're taking in, some of those factors and again, using data to quantify the risk. So from my perspective, there are some industries that were probably unfazed by the pandemic. And so those can be thrown out very quickly. So lots of data points like that.
Thank you, Lisa. So big thank you to our panelists today. Appreciate your segments. They're very well received. Thank you, guys. And we're gonna go ahead and close out here. So Lisa, maybe remind everyone about this great top new product on Transforming Your Business Model project.
And really, this ties into what Lindsay and I were talking about the employee experience. If you look at all of the resources, and I would primarily suggest going to the talent and the service offerings buckets first. This is about how we can meet the needs and create cultures and environments within our profession that are going to support the young people coming in, make the profession attractive, and get us back to being a profession of choice.
Wonderful. Thank you, Lisa. Also, just want to remind everyone, we talked a little bit about .cpa domains today. Brian did a great job. He was originally attracted to it because of increased security, but also as a branding opportunity. So if anyone out there is interested in learning more, please visit domains.cpa. We'd also, one final call out to everyone, we currently have the CAS benchmark survey open. It will be open through July 14th, so there's still time to complete your own CAS benchmark. We'd welcome it, we'd appreciate it. It really helps us create good data for all of those that are building these practices out to compare and contrast. So please, if you do have time and are interested, please go ahead and take that survey. Lastly, I know some folks even in the chat, were commenting on the schedule. It does get a little bit disjointed in the summer because there are so many activities going on. We try to stay and stick to our 2-week schedule. I know Lisa and I were talking about for a couple of those weeks where we have, kind of a 3-week break, we're either going to try to do an on-demand video that we will push out to the community, or do a newsletter update so that we make sure that we're just keeping everybody informed and connected. And then once we move a little bit toward the end of the summer, the schedule kind of adjusts back to normal hours. But I don't know if you had anything on that, Lisa.
All I was going to say is have a great 4th of July celebration. Stay safe out there, stay cool. And again, we're thinking about the areas of the country that are being impacted by all these weather issues.
Awesome, Lisa. We'll end on that note, and thank you to everyone that attended today. We appreciate your time.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.